High finance is a world where companies are bought, sold, and sometimes sold right back to their previous owners. Right now, a nearly $3 billion deal is in motion. Aon, the insurance giant, is negotiating with Madison Dearborn, a private equity firm, to sell back NFP's wealth management business. Madison Dearborn knows this asset well. They just sold it to Aon as part of a $13.4 billion acquisition. Now they want it back, not out of nostalgia, but because the numbers make sense. For Aon, the NFP wealth business is profitable, but doesn't fit their focus on commercial risk and reinsurance. So a conversation began, a potential sale, a return to sender. The deal is valued at nearly $3 billion. Madison Dearborn sees value where Aon sees a non-core asset. They buy, build, sell, and sometimes buy back. They know the business, its people, and its potential. For them, this is a strategic reunion. As the deal nears announcement, it's a classic Wall Street move. Aon streamlines, pays down debt, and focuses on its core. Madison Dearborn reclaims a prized asset they believe can grow even more. This is the logic of modern capitalism. Everything has a price, and strategy drives every sale. The boomerang is about to land, and both sides are playing to their strengths. In high finance, what goes around comes around, if the numbers add up. The next chapter is about to begin. When Aon spent $13.4 billion on NFP, it wasn't just buying a company, it was buying a strategy. But big acquisitions come with pieces that don't fit. The NFP wealth business, though profitable, isn't aligned with Aon's focus on institutional clients and global risk. So Aon is selling it off. This move is about focus, streamlining after a massive acquisition. Selling non-core assets generates cash, helping pay down acquisition debt and pleasing investors. It also lets Aon's leadership concentrate on the parts of NFP that matter most: property and casualty brokerage, benefits consulting, and retirement plan expertise. By divesting the wealth business, Aon removes a distraction and simplifies integration. It's a classic case of corporate discipline, becoming a master of some trades, not a jack of all. The $3 billion sale is a smart, calculated decision. It signals to the market that Aon has a clear plan. The focus now is on synergy and scale, not side businesses. For Aon, this is about sharpening its edge. For the wealth business, it's a new beginning. Private equity firms like Madison Dearborn are experts at recycling assets for profit. They know the NFP wealth business inside and out. They built it, grew it, and now want it back. This isn't a gamble. It's a calculated investment in a business they understand deeply. Their intimate knowledge reduces risk. They're not buying blind. Madison Dearborn's plan: operate NFP's wealth business as a focused, standalone platform. Every decision will target growth in wealth management. Top advisors and management will be incentivized with equity, aligning their success with the firm's. Private equity ownership brings an entrepreneurial spirit that big corporations can't match. With an aging population and massive wealth transfer underway, the market for financial advice is booming. Madison Dearborn aims to grow the business, invest in technology, recruit top talent, and pursue acquisitions. Their goal: turn a $3 billion business into a $5 or $6 billion exit in 5 to 7 years. It's a proven playbook. For Madison Dearborn, this is a familiar game, and they play to win. The cycle of buy, build, and sell continues. What is Madison Dearborn buying for $3 billion? Not just one company, but a portfolio of elite wealth management firms. The Stars WealthSpire Advisors, Fiducient Advisors, and Newport Private Wealth. These firms serve wealthy individuals, families, and institutions, managing about $60 billion in client assets. They also advise on another $500 billion, guiding vast pools of capital. This influence is both powerful and profitable. Together, these businesses contributed about 1/5 of NFP's total profits. WealthSpire is a leader in financial planning for high-net-worth clients. Fiducient focuses on institutional clients like retirement plans. Newport brings international reach from Canada. This is a turnkey, multifaceted wealth platform: expertise in private wealth, institutional consulting, and cross-border planning. Madison Dearborn isn't buying a fixer-upper. They're buying a mansion ready to grow. The infrastructure, talent, and brand are all in place. The challenge: supercharge growth as a focused, independent entity. Away from Aon's shadow, these firms can realize their full potential. For Madison Dearborn, it's a rare opportunity to scale a proven platform. A $3 billion deal isn't paid for with pocket change, it's a carefully engineered financial structure. Madison Dearborn's approach: classic leveraged buyout, mixing equity and debt. They'll put up about $1.5 billion in equity, real skin in the game. The rest comes from over $1 billion in debt, arranged by banks like Goldman Sachs and UBS. The new NFP Wealth Company's assets and cash flows back the loans. This structure amplifies returns if the business grows, but also increases risk. Aon gets cash up front and a clean break. Madison Dearborn gains control for a fraction of the price in cash. The banks profit from interest and fees. The risk: the new company must service its debt and grow fast. Success means big returns for Madison Dearborn. Failure means the equity is wiped out. The stakes are high, but so is the potential reward. Behind the billions, there are people, advisors and clients whose lives are impacted by this deal. For advisors, leaving Aon's bureaucracy for Madison Dearborn's focused ownership could mean more autonomy and resources. Private equity often offers equity stakes to top performers, turning employees into owners. This motivates and retains talent and attracts ambitious advisors from competitors. For clients, the transition should be seamless. Their advisor remains, now with more tools and motivation. The hope: better service, enhanced technology, and a nimble response to client needs. The risk pressure to generate returns could shift focus to more profitable products. But the core relationship, advisor and client, remains central. Madison Dearborn's model is to empower advisors, not micromanage them. For clients, the promise is continuity with a potential for improvement. For advisors, it's a chance to share in the firm's success. The future feels more entrepreneurial and more personal. This deal highlights two distinct corporate philosophies. Aon is the global consolidator, seeking scale and synergy. Their strength is in serving massive clients with comprehensive solutions. The NFP wealth business didn't fit, so they're selling it to focus on their core. Madison Dearborn is the specialist, betting on focused value creation. They see the NFP wealth business as a prime platform in a booming sector. By separating it from Aon, they believe they can unlock its full potential. Each side is playing to its strengths. Aon streamlines, Madison Dearborn builds. It's a symbiotic relationship. Aon gets leaner, Madison Dearborn gets a growth engine. This is the financial ecosystem at work: strategic buyers and specialists trading assets to maximize value. Both are right in their own way. The deal is a win-win, driven by clarity of purpose. In the end, each titan walks away stronger. A $3 billion deal sends shockwaves through the wealth management industry. It signals the flood of private equity capital into the sector, attracted by recurring revenues and high margins. Madison Dearborn's move is a massive vote of confidence in the independent advisory model. The new NFP Wealth platform will be a formidable competitor, likely accelerating industry consolidation. Hundreds of smaller firms become potential acquisition targets. For firm owners, this means more buyers and higher valuations. For big players, it means fiercer competition for talent and clients. The battle for top advisors intensifies as equity ownership becomes a key recruitment tool. Other firms will have to rethink how they attract and retain talent. The ripples from this deal will be felt across the industry. When the deal closes, the real work begins. For Aon, it's about paying down debt and integrating NFP's core insurance and benefits businesses. Success will depend on merging systems, cultures, and realizing synergies. Selling the wealth arm lets Aon focus on what matters most. For the new NFP wealth business, it's about establishing an independent identity and executing Madison Dearborn's growth playbook. That means investing in technology, branding, and strategic acquisitions. Madison Dearborn's goal: grow fast, then exit profitably in 5 to 7 years, maybe through a sale or IPO. The journey from $3 billion to a potential $6 billion exit starts now. The handshake is done, but the clock is ticking. For Aon, it's about focus and discipline. For Madison Dearborn, it's about growth and opportunity. The game has just changed for everyone involved.